investors traded a record $6.6 trillion worth of stock in 2025 for the first half. Tariffs, marked volatility, and war in the Middle East couldn't slow down the buying spree by individual investors. Shout out to y'all dope asses. As they traded record amount of stocks for the first half of the year. Retail investors cumulatively. Come on, there we go. Come on, God.
I ain't mad at you.
Come on. I ain't gonna butcher it.
Yeah, don't fake it either.
I ain't gonna butcher it. I'm gonna look. The first thing I did, I said, okay.
Mm-hmm.
Context clues.
Yep.
Cum. I know the first one is cum. Cum, I'm there. I know the last part is Ellie. I gotta get the middle. It wasn't lining up.
Look, I'm mad though. You asked LaShawna, like you just ran past me.
I wasn't going to you. I wasn't going to you.
Okay,
right?
she's laughing a little bit too much.
I wasn't gonna butcher it. Look, I'm trying to get it. Look, you know my brain going fast in real time. I'm like, ooh, I know it. I said, don't you do it. All right, bought around $3.4 trillion worth of equities over the first half of 2025, according to data using from the NASDAQ. Right. At the same time, they sold about $3.2 trillion worth, bringing the total of trade over $6.6 trillion. Let's give ourselves a round of applause for that. First, let's print some money. Next, give ourselves some cheers. Second, let's set it on fire.
See, man. Like me, man.
Let Mitch talk right quick.
I love the game. See,
all
man.
Right. So, here's what I love about that. We gotta give credit, and I've always given you all credit for how dope y'all are. Y'all, and we put that data out earlier that we thugged it out during the dip, massively. For the most part, we was there, we switched, we pivoted. Salute to y'all. Now I'm gonna tell y'all something. If you thug that out, it ain't nothing you can't thug out. You thugged that out for 8 weeks, y'all. You went through every emotion. It don't get no worse than that. It don't get no worse than that. So just know, $6.6 trillion worth of stocks, y'all, first half. That's the retailers. Y'all was trapping y'all ass off. Let's go a little further, Jose. Now, you know I gotta give y'all some data. The one thing I'm gonna do is give y'all data, and so far we ain't been wrong in our data that we dropped, right? As we position ourselves, anytime you get a 5 to 10% first half gain, historically, that's a bullish signal for the S&P for the rest of the year. Let's work it down, right? The S&P performance up year to date between 5 or 10% at the midway point of the year. Watch this, y'all. 50, 52, 59, 63, 71, 72, 76, 71, 2012, 2012. You ended the year, year to date at the end of June, 5%, 5%, 8%, 9%, 8%, 5%, 8%, 6%, 6%, 4%. The Q3 return, now that's the difference. This is where it gets really, really good at. Because from July to September, we hit Q3. Watch this. 9%, minus 1%, minus 3%, 3%, 2%, 7%, 5.8%, minus 3%, 3%, 5%. On average, it's a 2%. On average, it's 2% higher. On average, you get 2%. The median is 3%, and 73% of the times, it's higher. Let's break that down. Once you get to June, the third quarter is July, August, and September. On average, that Q3, you get a 2% gain. The median is a 3% gain. But 73% of the time, Q3 was higher. The final 6 months, which is July, August, September, October, November, December, 5%, 5%, 6%, 6%, 8%, 4%, 10%, 10%, 5%. Right? And then the last, you ended with 21, 6, 8, 11, 13, 25, 25, 25. Now, 2012, you had 13%, 93%. On average, you finished the year with another 13.8%. The median was 13%. Watch this. Let's go a little further. On average, if you had a 5 to 10% first half, on average, you ended the year 93% higher. All right, so what does that tell us? That says, based on data, from 1950 to now, if you had a 5 to 10% first half, you have a 93% chance of ending the year higher. Now, here's how we're going to coincide with that. Watch this, because Goldman Sachs did something too today. They put out a stat. Goldman Sachs raised the price target of the S&P 500 from 6,500 to 6,900. So you got a 93% of ending the year higher. On average, you added another anywhere between 11%. So it was adding 11%, 13%, something like that in the last 6 months. So I think the market right now is up, what? 6.11%. Right above it. Now, if you add another 13%, that puts you at about 18, 19%. Not a bad year. Nah, Goldman Sachs done increased they done went from what, 66 or 65, now they saying 69, that's a 400-point increase. Jose, what our result was? What we said? I think we said what, 67? I think we said 67 in the year. So I ain't mad at that. Nah, let's go a little further. Right, so here we are, right here, we're in July. Now, we understand, I've said this before, I said it's I said 68 and
68,
good job.
yeah.
I knew it was somewhere like that, so 68, I said 68. So I'm saying, Goldman, what we doing? About another 11%? Shit, I ain't mad at that. All right, so here we are in July. Right, so we have June, so here we are, we understand that July is the best, typically the best month is because the first 2 weeks are usually insane. Now, the last 2 days have stumbled July, right? Started off pretty good. The last 2 days have stumbled it. Let's see, right? But in my mind,
Yo, that was early too.
what?
When you did that, that was the special Trapper Thursday episode we did.
Trappin Thursday when I said that?
Yeah, it was January 14th.
January 14th.
Mm-hmm.
Come on, bro. You know, if we get 6,800, you know we got to run that clip. We get 6,800, we got to run that clip,
Trap
dog.
the Damas.
Don't do that, bro. All right, so based on this, so July is typically a great month. Y'all know last year, the second week of July, we got punched in the face. Big time. Big time. And so here we are. So what I want to do is just see how this trade talk gonna go. I got a question though. So Trump sending out some more letters. Do we think that those letters will be responded to by August 1st? Or do you think that bruh is about to go all in? Do you think we going backward? Do you think we going back to April, whatever? Do you think we going back? Might not get that deep, but I'm just saying, it's a hard recovery to go back there from here.
Facts. And I'll say the reason, like, he reacted to that anyway, because he saw the bond market. So if we go down there, I mean, the bond market gonna react to that too. So, I mean, he probably
I'm just
not
saying,
that.
even if we go go halfway back.
Yeah. I don't think intentionally. He hasn't been like, he's still, him.
So I'm
That's
saying,
crazy.
do we go like, cause now, I'm gonna be real with you. Now, it's a thing now. Now it's like, hey, I'm telling y'all what we doing. And Scott Bessent done came out and said, hey, he gonna go back. Y'all playing, sign the papers. Them papers. He gonna sign them papers.
Real talk. That's a coin
Them
toss.
papers, dog. Them papers. Say, I'm gonna tell you something, bro. You gotta really love this game, dog. You gotta love it.